Fed Chairman Jay Powell has told the American public to expect pain in the fight against inflation. But could the Fed's rate hiking face a political backlash from the public? Senior economics reporter Steve Leisman joins us with another installment of the CNBC All-America Economic Survey, looking at what the public thinks of the Fed and rate hikes. And Steve, good morning.
Good morning, Becky. Yeah, interesting results here. The CNBC All-America Economic Survey finding the American public has little confidence in the Federal Reserve as an institution, even less than it has in Congress, but does have some confidence in the Fed's ability to bring down inflation. Just 15% of the public say they are extremely or quite confident in the Fed, compared with 22% for Republicans and 21% for Democrats in Congress. 44% are only somewhat confident. 35% say they're not confident at all. There are big gaps by party, just 7% of Republicans saying they're confident compared to 23% of Democrats. Now, when we ask whether the Fed's rate hikes will work at lowering inflation, you get a slim 53% majority saying it will be very or somewhat effective. 40% say it won't be. Democrats are far more confident than Republicans, and those with more money in the stock market, are $50,000 or more in stocks, they're more confident than those with less money in the market. So this is limited good news for the Fed, which needs the public to believe inflation will decline and that the Fed is going to be effective at doing it and help avoiding an inflationary spiral. But a key to the Fed's rate hike plan is how much political support the Fed has, and the public is divided on this critical question. 47% say it's more important for the Fed to protect jobs even if inflation continues to rise. 43% support combating inflation even if it means more unemployment. Now, the margin of error in the poll is 3.5%, so it's pretty much a split, but it's potentially concerning because unemployment right now is at an historic low. The Fed, which markets think is going to raise rates above 5% this morning, could have to raise rates amid rising opposition from politicians and rising opposition from the public, Becky.
Hey, Steve, I would think that the biggest threat would be from politicians who are kind of jumping on this and trying to stir the public up, using these as talking points, trying to win political plays by saying, yeah, you feel terrible, right? Inflation is taking all your money and you're having trouble finding a job and it's the Fed's fault. I would think it's not the public leading the politicians, but probably the politicians leading the public.
I think it's interesting, Becky, you're talking about that prospectively. I think some of it's already happening. I think there have been folks like Elizabeth Warren out there who have been complaining about the Fed's actions. I will say, Becky, having watched this for a while, right now, pretty good support from the politicians. Because as you saw from our results yesterday, and look at the results right now, the public is being hurt by inflation, so there is political support. The question becomes how these poll numbers, what happens to these poll numbers, and what politicians do if you do get a rise in unemployment. When we ask people the most important issues, jobs and unemployment are far down the list. If that starts to creep up the list, I think you're going to have more people complaining about the Fed's actions, and then we'll see how Powell and the Fed react to that kind of public opposition.
Although Bailey from the Bank of England didn't step down, kind of asserted the bank's independence, and you wonder if Jay Powell was watching very closely and taking notes.
Yeah, it's a really interesting thing. I mean, I guess somebody was saying Bailey took down the government. He did not flinch. He kept going. He did give them a couple weeks to get their act in order. And right now, I don't know, Becky, have you checked the 10-year gilt this morning? It was not the first thing I did. I had been doing that as the first thing.
I've been watching the 10-year Treasury, but not the gilt.
Yeah, the 10-year Treasury has been on the rise, and the gilt, it looks like it's not that bad. It's 405. I'm looking at now, 402. But the 10-year has been, the yield's been on a tear. Bond prices are down. And if you have the Fed rate outlook chart, guys, in the back, 502, 503 this morning, Becky, is the outlook for the peak funds rate.